Well, now, considering you brought my mother into it, 71.50.
Done. You're here for my lawyers tomorrow, 8 a.m. Good night.
Yeah, he's right. I had to sell. Key to the game is your capital reserves. You don't have enough, you can't piss in the tall weeds with big dogs.
Our pal Gordon Gekko is coming through with that sage advice when we need it the most. I mean, look at this. The drop does not stop. Just keeps falling and falling. It's not pretty, but it doesn't mean you still can't do well in the market. So Gordon talks about two things that we could really relate to right now. First is how you should be okay with selling, and the second is how selling relates to capital reserves, which is really important in investing. So we're going to talk about those concepts in today's video, and you'll see how important it is when we're dealing with a market downturn like what we're experiencing now. And everything we're about to talk about in this video is what we discuss in Strategy Builder Pro, which is our training program to help you build a professional level strategy. And professional strategies are all about risk management. So there's a lot of info in here on the right way to sell and how to set that up. Anyway, check this out. There's a link down below in the description and comments, and do that now because this closes Sunday. And I mean, you want to have a good strategy in place when you got to deal with 10% corrections like this. Just use this current market experience as fuel to get your risk management together. But okay, in that clip, the first thing that Gordon Gekko says is that he had to sell. And the way he was saying it conveyed that he was comfortable with selling. And that's very important, to be comfortable with selling. Now, of course, there's different ways of selling. There's panic selling, which we don't want. There's selling according to your strategy, which we do want. And then there's not selling at all and just hoping that things turn around. Again, something we do not want. So the first type of selling is panic selling, which is very detrimental to any money you're trying to make in the stock market. Panic selling is when you throw out any plan that you had and just start dumping everything because you get scared. And again, right now is one of the best examples because we got a coronavirus pandemic that's made its way to the US. Japan has shut down all their schools, including their colleges and everything, until spring. And then you see the stock market dropping with every headline saying it's because of this scary coronavirus. If you've watched our other videos, you know it's not just because of this virus. But the point is, it's very good for fear, for breeding fear. And this is a time when people are like, you know what, I can't handle it. I'm out. Let me take my money out. Let me sell everything. And usually when you feel like that, it is the worst time to sell. So let me show you a simple but effective trick to help you deal with that fear. So if we're zoomed in right now, right, to this daily chart of the market, it looks terrible. Market is almost down over 10%. You see this and it looks like the world is ending. This thing is going straight down. It's ridiculous. And yeah, you are gonna get scared. I get scared too. That's why I just use my mouse wheel and I zoom out. Keep zooming until you really can't see that drop. Zoom some more. Oh, there you go. Oh yeah, that feels better. And you see what happens here? Sounds stupid, but it's effective because when you zoom out like this, you actually see the larger trend. And this doesn't look as bad. Now you might be looking at this and saying, okay, it still looks pretty bad. All right then, that's okay. Let's zoom out even more. Let's switch from daily to weekly bars. Oh yeah, that looks good. Now we're seeing back to 2016-15. It just looks like this market continues to go up. And if you're still not liking it, let's just switch to monthly bars. And look at that, going all the way back to 2009. The trend looks a lot safer, right? Looks a lot less volatile, and you could just tell it's just going up. And this chart looks a lot better than this chart right here, right? This is the chart that will freak you out. Again, it sounds simple, sounds stupid, but it does help. It's zooming out to see the bigger picture. Not so that you can ignore what's going on right now, but just so you could put it into perspective. And it helps to dampen that fear so you don't do something stupid. Because the right way to sell and the way you should feel comfortable selling is when your strategy tells you to. And this is what Gekko is talking about because he had a strategy in place beforehand too with the British dude that he screwed over, which is where that clip was from. But I'll cover that deal in a different video. But I say this all the time, but following the rules of your strategy is how you're successful in the market. And that's because those rules you put together, the strategy of when you're going to sell, you did that way beforehand. You did it when you were rational before you were actually in the market. That was your rational self making those rules. And now when you're looking at this 10% drop and you got your mask on 24 hours a day, even in the shower, just to avoid any coronavirus, well, that's your emotional, irrational self. And you don't want to deal with him. You don't want him making financial decisions for sure. That's why you had your rational guy do it before and then he wrote down what to do. So your current self just follows that. And when you're following those rules, you know, sometimes it feels like it sucks, right? Because you sell and then all of a sudden the stock shoots back up, or you buy and it falls. Well, the truth is when you're following your strategy, you have no idea what the next trade is going to bring. It might not work out, but that's okay because the whole point of a strategy is that you're successful over the long term, over the full cycle of every winning and losing trade you take, you're going to end up higher on the year. That's the benefit of having a good strategy. Now, another problem that people run into is not listening to their strategy when it tells them to sell, and instead holding on to their position, hoping it turns around. It's called a hold and hope. Once again, terrible idea because you're not following your strategy, but I get it. You don't want to sell because you don't want to realize the loss. Losses look much better on paper. As long as it's on paper and you haven't realized it by actually selling, there's a chance, even though it might be small, that the thing turns around and you make all that money back. That's why you got to be comfortable with taking the loss. Honestly, it's the market's job to just hand out losses, and it's our job to be risk managers and mitigate those losses. We just want to survive for those few good times where the market actually gives us returns. Then you capitalize on those and you can make a lot of money doing this thing. But you got to realize that a lot of the best investors in the world have win percentages below 50%. They have win percentages even in the 30% range. And they're okay and comfortable with that because they understand that the market distributes more losses than it does wins. So you got to be fine with selling out and taking the loss. You got to trade with the structure of the market. You can't trade against the market. And if you keep trying the hold and hope, what normally happens is that you dig yourself into a deeper and deeper hole. And then your small loss becomes a big loss, and then you end up screwing yourself. So selling and being comfortable with it becomes so important because of the second thing that Gordon Gekko said. He said that the key to this game is capital reserves. And that's absolutely true. Having dry powder and cash is super important. You need cash to deploy, otherwise you're out of the game. You can't invest with nothing, right? So that's the number one reason why risk management is so important, right? Because once you lose a large amount of money, it's really difficult to make that money back. We know that in the stock market especially, it takes money to make money. Making 10% on $10 million is a lot sweeter than 10% on $1,000. So you want to make sure that you're continuously building your capital. And we know how hard it becomes with losses, right? Because if you take a 50% loss, it takes 100% return to get back to break even. It takes a long time, and 100% in the stock market is no joke. It's not easy to come by or something. So you're better off having that risk control so you can protect that cash, protect those capital reserves. Because if you lose 5%, it only takes 5.3% to break even. So you got to preserve the capital to stay in the game. And the second reason you want those capital reserves is because you want that cash when something like this happens, when the market is dropping, because then you have money to deploy into those good deals. So like with this drop right now, there's a lot of guys sitting on the sidelines just licking their lips because they know they're about to get some nice deals. And the most famous example of this is Warren Buffett, who has $128 billion in cash just sitting on the sidelines. This is also one of the most extreme examples, but he knows the importance of having that dry powder and those capital reserves available when the deals actually come. Because again, the market does not offer things often. You get a good opportunity here and there, and when you get it, you got to capitalize on it. And all the greatest investors do this. All the market wizards that you read about, the Stan Druckenmillers, George Soros, they know how the market distributes returns, and it's not even. So a lot of the time they're sitting there and patiently waiting with a bunch of cash. Cash is a position. That's what a lot of people don't realize. Stocks, bonds, cash. It's okay to sit in cash. Too many people get an itchy trigger finger, as soon as they get a little cash, they got to deploy it. But you don't have to do that. You can be patient. Another example is what I did with my own portfolio. So let's go back to Tesla, which I probably used this example like 8 times in the last few weeks. But if you remember, on this huge run up that we had in Tesla, I was selling all the way up. And I'm using Tesla again, but this happened in all the stocks in my portfolio. They were all running like this. Not as fast as Tesla, but they were all going up. And I was selling in all of them. So by the time we hit this top right here in the market, I was only 60% invested. I have 40% cash. And that's because I was taking profits this whole way up. Now, along the way, when I was taking profits, it didn't feel great because as soon as I took profits, the stock kept running. And it's like, well, if I kept it in there, I would have made more. But now as the market is dropping like this, it feels a lot better in retrospect on what I did because I locked in those gains first of all, and I also saved a bunch of cash to put on the sidelines. And now I have all this cash to redeploy now that prices are much lower. Also, quick update on Tesla here. I was pretty excited at how it was holding up, but it looks like today the dam just broke. So I'm not as attracted to Tesla when the market turns around and I want to deploy that cash. And by the way, I've been selling on the way up, and now as things are dropping, I'm selling on the way down too. Like Skyworks is a company that I just got knocked out of, which sucks sucks because I took a loss, but I'm following my strategy and I'm getting out of it, and now I have that cash to deploy again. It's less cash, but it's still cash, and it's better than trying to hope for this thing to turn around and it might end up down here. Then I'd have even less cash. So you can see in this video and in most of my videos, all I'm talking about is how important it is to have risk management and follow that risk management, which means following your strategy. Because risk management and trade management, the reason I talk about them so much is because they're 90% of the game. It's in times like this when the market is dropping this fast that it really comes in handy. And this is when investors start getting separated in their P&Ls. Because right now the market is down for the year, but I'm up over 10%. And it's not because I was crushing the market when it was just on its massive run just now. Because in a run like that, you know, most active managers are not beating the market. But the reason I'm beating it so much now is because I had my risk management in place. So I'm cutting off these losses while someone who doesn't have that in place is taking the full drop. So this is when P&Ls are going to look really different. If you're managing risk, you're going to do better over the long term. And that's why I'm so excited about Strategy Builder Pro, because we finally put together the course that teaches a lot of this trade management stuff. And it really couldn't have come at a better time. Well, a better time would be before this drop, but like I said, this is good motivation to get things in place, because this drop that you see is not going to be a one-time thing either. It's going to happen again. So you want to make sure to have your strategy in place with all the right risk control and position sizing and entries and exits and pyramiding and taking profits. All that trade management stuff, that's what we go over here. So check that out, link down below in the description and comments, and it closes Sunday. So take advantage of it now. It is always a good time to bulk up your risk management. But okay, I hope you are staying safe out there, because this has been a rough week. I'll keep hitting you with market updates as our team does the research. So if you want to see videos like this and those market updates, make sure you subscribe, hit that notification bell so you get an email notification when those videos are released, and I will see you in the next one. Stay fallible out there. Bye.